stick with what he calls, quote, the fallen angels. So joining us now is Evercore ISI Senior Managing Director Julian Emanuel. Julian, it's great to have you back on Overtime. Let's start right there. Are these market moves overdone? Where would you be lightening up?
Well, so look, we have come a very long way, basically 20% off the lows of April 7th. Frankly, when the bearishness was as pervasive as we'd ever seen it since the financial crisis. Now, we're not in the exact opposite sort of ebullience, but certainly what we saw today was really a ratification of the fact that things have gotten incrementally better and that we can sort of quantify what tariffs could look like. But it does feel like it's a bit of a best case scenario. And so for us, what we want to do is we want to stick with the winners of the old bull market, the names that got hit the most during the downturn, and the names that have been leading, and you've been showing them on your screen, whether you call it Mag 7 or you call it tech or you call it communication services, consumer discretionary. These things, in our mind, are going to continue to lead the charge to what we think are going to be eventual all-time highs, though perhaps that may have to wait until 2026.
It's interesting to hear you say that because at least ahead of today, and I realize a lot happened and changed over the weekend, but an equal-weighted version of the S&P 500 had outperformed that standard cap-weighted S&P for 6 consecutive sessions. It was the longest streak of outperformance since January of 2023. We've been talking about this rotation into the other 493. You think that's come and gone here then?
Well, we wouldn't say it's come and gone because ultimately, if you do get to new highs, as we eventually expect, those names will participate. But if you look at how bull markets tend to evolve, particularly one which we would say is structural like this, with comparisons to the internet structural bull market of the late 1990s, AI is a theme that has longer legs. And frankly, given the fact that what we haven't seen is a robust capital market cycle, and this is part of the anticipation and part of the reason today's gains were as strong as they were, those names and those themes tend to lead that type of capital market cycle.
Julian, we now have these 2 rolling 90-day tariff pauses. One, I think that ends in about 2 months. Another, arguably more important in those 3 months. What does that mean for certainty and predictability in this market? And do you think we see another pull forward of demand during this China pause in particular?
Well, so if you get the anecdotal read-throughs from shipping people, they're talking about, you're going to have an absolute shipping boom over the next, 30 to 90 days to get in front of that expiring period. And that certainly makes sense. So the focus will continue to be on what the cameras look like at the Port of Los Angeles. But what it really means is that there is going to be this heightened uncertainty, albeit a lot less than it was in April. But when uncertainty remains as pervasive as is likely to be the case, at 23 times earnings at the broad S&P 500, we want to be selective rather than just, wantonly buying the index.
Because we're in mid-May, right? That period where the Christmas stock up starts. Everybody's going to try to get their Christmas inventory in, their holiday inventory in over the next 90 days. Now, do you think maybe the administration touched that hot stove and won't put the market through this again, or is it too soon to make that kind of determination?
Well, President Trump said it himself. It may not be $30, but it's going to be $2 and maybe $5, and maybe it's going to be closer to 10, given the fact that the tariffs appear to be going down. But the fact is that policy has pivoted over the last month plus, particularly with the intent to make sure that that consumers and businesses in general were getting the signal that there is absolutely no tolerance for a recession. And that's part of why you've seen the reaction that you've seen.
We've been having so many conversations for so many weeks now about the U.S. versus everything else when it comes to the markets and outperformance and where to be invested right now. Do you buy American here?
So, again, in our view, the mega cap names, tech-centric names are likely to lead the upside looking out over the next 12 to 18 months. You can make a very good argument that after more than a decade of America First outperformance, that there is going to be longer term give back. But the theme and the concept and the dollar, frankly, were so oversold over the last number of weeks that it is more than a reflex rebound in America-centric stocks.